Hello everyone. In this video, we're going to discuss the emotions behind trading and ways of incorporating some healthy habits in order to make the most sound, rational decisions in your trading career, right? As human beings, we all exhibit the same emotions, going from the biggest case of extreme fear when something's not going your way, all the way to the euphoria when something is going beyond the expectations. And regardless of what you're feeling when in a position, when emotions begin to override your intellectual processing, that's when decision making starts to become impaired and we start making some actions that may or may not be in our best interest, right? So again, as human beings, we are all subject to this, which is why in this video, I wanted to highlight a few things that I incorporate, as well as many other traders have incorporated into their lives in order to become consistently profitable in this business, right? And here, so I have actually highlighted 4 key things I want to discuss in this particular video. As simple as they may seem, when you do add them to your life, they actually make a profound difference in your decision making, not just with trading, but in your daily life as well, which I think has such significant importance, right? If anything, I feel as though that trading can actually bring out the most extreme emotions that we face, and whether or not we actually notice them in our day-to-day lives, we do make decisions at times based on our emotions when it may or may not be in our best interest to do so, right? So I have here, as shown, we're going to discuss briefly the application of Stoicism to trading, the importance of having a goal and keeping it in mind, as well as systematic trading, a business model, if you will, and meditation to remain centered. So here, right, just to recap, when emotions are dictating performance, we could have the ideal setup technically. But if emotions begin to override intellectual processing, we are prone to making mistakes such as the following, whether it's prematurely exiting positions, switching sides when the setup hasn't been invalidated, over trading the same position due to impatience. We also have things like FOMO, revenge trading, just the entire thing. There's many different types of mistakes that we can end up making when our emotions come into play. So we have to be able to catch ourselves before we do that. And once more, again, I have to stress it because I want to make sure that nobody feels as though it's just them, that they're not getting it right or something like that. Because again, we are all prone to making mistakes like this. And again, it's okay if in the beginning it happens, right? The whole point of it is that we learn from those mistakes in the beginning and then we just move on. And then we just make more sound decisions going forward, right? Now, I wanted to discuss Stoicism, and for those of you that aren't familiar with what Stoicism is, it's simply the philosophy of personal ethics informed by its system of logic and views on the natural world. Another definition for it is the endurance of pain or hardship without the display of feelings and without complaint, which if we had this naturally, I think everybody would be having, an extremely successful trading career, but that's not the case. As human beings, we are subject to these feelings, right? And then some notable Stoics as well that those of you may be familiar with already. We have Marcus Aurelius, we have Lucius Annaeus Seneca, we have Epictetus, and we have Zeno of Citium, right? So, the dichotomy of control. This is the part of Stoicism that I extracted for this video, and again, I actually am highly recommending looking into each of these topics that we're discussing in this video in further detail so that you can familiarize yourself much more, right? So with the dichotomy of control, the reason why I pulled this out, first off, I just want to state what the definition is according to the Stoics, it's really just what they're defining as what we have control over our lives versus what we don't. And according to the Stoics, we have control over our impulses, our judgments, our desires, and what we don't control is everything else, right? And I have a quote here by Epictetus. It's, we cannot choose our external circumstances, but we can always choose how we respond to them, okay? And again, I'm just breaking it down here with the impulse, right? Impulses are simply just the reaction that we make based off of the initial emotional response that we have. So like a knee-jerk reaction, right, would be an impulsive move. We don't have control over what happens to us in our lives, but we have the power to exercise patience in order to think and respond accordingly, thus control our impulses. And then basically discussing our impulses, it's the FOMO, it's the panic selling, it's the premature decisions it's the premature actions that we're making without actually thinking it through, right? Just being completely straightforward. Then we have our judgments, which is the act of forming an opinion or making a decision after careful thought. And then our desires, we pick and choose what we want in this life, right? We do have control over our desires. Now, part of the dichotomy control I wanted to pull out and actually look at further is the impulse. So we have the external event, we have the initial emotional response, and then we have here at the end, it's the physical response, okay? The external event, an example of this would be the market's movement, okay? And then the initial emotional response would simply just be how you're responding to the market when you first see what's happening, right? Let's say the day starting off, you open up your screen, turn it on, you see that there's something that's not going your way, and from then on, you may be prone to making a decision, such as if you're down on a position, out of nowhere, let's say, you check the market, you check on the open, and things aren't going well. So many people will do is they'll just panic sell out of the position as soon as possible, right? Or just making any other type of decision that wasn't part of their plan, okay? And that would be that physical response, okay? The where you have control is actually where we do have control, which is between the initial emotional response and the physical response, okay? So we do have choice in what we do. We don't just act on impulse, right? So as long as we're aware and catch ourselves with that emotional response that we're initially having, from then on we could make a sound decision and make the most appropriate choices that can make us profitable and or mitigate risk, okay? So very, very straightforward. And then here we're going to talk about the importance of having a goal, right? And now going back to Marcus Aurelius, one of the most notable Stoics, is for nothing should be done without an end in view. One of my favorite quotes actually from him, because when you have a goal in mind as to why you are trading or investing, you'll have a reason to be more mindful of risk management and more inclined to stick to taking profits consistently. As the goal is kept in mind and greed doesn't take over, then taking profits becomes systematic. So you won't even be, thinking about it as much. You're just sticking with the plan that you have, and therefore you're not, running risk of, let's say, giving back gains or getting too greedy and thinking that, all right, well, I hit my target already. Why don't I just keep going right here? Essentially, in short, it's just like somebody who doesn't know when to leave a casino. You have to have a plan in place, right? Otherwise, you're just going to stay until all the chips are gone, right? And then I just put up some, examples of goals. Let's say you have to pay off a car loan, mortgage, college tuition, you want a new watch, right? You want to treat yourself, a vacation. It could be anything. And the reason why I picked some of these two as well is that many people that do get into trading, they're not even looking at it to do it as a career. Maybe they just want to use it as like a secondary source of income, just for like a quick, goal that they want to achieve. But regardless of the matter, they have to treat it the same as anybody else in order to be successful, right? And again, just talking about further detail, the importance of having a goal is that when having a financial goal in mind, a good approach is to break it down into sub goals. And this is where I talk about a little bit as an idea of profit taking strategies. With having sub goals in mind, it enforces consistent profit taking and pulling funds out of the account, as opposed to consistently trading with everything and run the risk of giving back some/all of the gains worked for. I just mentioned this already, talking about somebody who just goes to the casino, and many times what do people do? They don't leave until they've lost it all, even if they're up, right? An example of something that could be done in your trading strategy of taking consistent profits, if you have a goal in mind, which many people do that are just getting into trading, they have a reason many of the times, whether it's a car payment or, car loan or mortgage. Let's say here, for example, $20,000 is owed on a car. Then you can take increments of X amount. Let's say it's periodically per week, if you're making a certain amount in profit, and then use that towards paying off the loan, right? And then there's many ways you can actually break this down. It really just comes down to, the dollar amount, let's say, of what your goal is, or whatever the goal may be in particular, what you're working with, and then from then on, writing out a premeditated plan in regards to how much you're going to pull out at a time, as opposed to saying, hey, as soon as I make this much amount of money, I'm going to pull everything out. Because again, in many cases, that never ends up happening. People usually end up sticking it out the entire way until they lose it all, right? If they're just starting out, is what I'm saying. All right. And then just to further elaborate, the importance of having a goal. Again, the greed, it has to be kept in check. If it's not, you're going to run the risk of giving everything back. And then here, we're going to lead into just systematic trading. So we talked about the importance of having a goal. And when you have sub-goals, it gives you an outline of how you should be taking profits. It basically develops good practice on turning trading into just a hobby, into a form of consistent income as an income stream, right? And it should be respected as such. As you can see here, I say that trading is no different from any other business, so it should be treated as such. Many people, when they get into trading, they just throw their capital in and they just basically go off of, there's no formulated plan or anything. They'll go off of what somebody simply said, or they're just throwing their money into something because they think it just looks good. They just shove all the chips in one shot. You have to have some type of business model in place. The money that you're working with is the money that you're investing into this business, right? So you have to treat it as such. It's really no different than any other business model, whether it's, let's say, a restaurant or any other, let's say, brick and mortar may have you. You have to keep account of everything that's going on, the buys, the sells, the profit, the losses, taxes, so on and so forth. It's all there. So you have to keep it. You have to keep it in mind whether you're doing this, on the side, or you're just getting started, or you're planning on doing this as a career. You have to treat it as a business regardless, okay? And then once you do, then you outline it in a mechanical way that'll aid you in being consistently profitable. So you want to develop a trading system that works for you. You have to stay consistent and never deviate away from it, and having a mechanical strategy will aid in consistent progress, taking emotions off the table, and establish a daily routine that will rule out unnecessary variables that can affect performance. So what I'm saying is simply, if you come up with a trading strategy that does work, that has been tested, numerous times, that has shown to be profitable for you, then incorporate that into your business model, make it part of your business model, and then you just run with it, right? And you don't really want to deviate away from it, because if you do, then you run the risk of error. Okay, so it's about creating consistency. It's about creating a strategy that you never deviate away from. And if you have something in place, the emotions aren't going to come into play, because you already know going into anything what the setups are that you're looking for, what are the prerequisites that you need to see in order to take on a position, whether it's a buy or a sell. So that's really what I'm saying, is you want to have something in line. If you're very comfortable with using certain indicators, stick with those certain indicators and try not to deviate away from it and get very experimental. And if you choose to get experimental, then you shouldn't be doing it at the risk of your business. That's really what I'm alluring to as well. So any way that you can rule the emotions off the table and then create something as mechanical as you can, that's what will give you that consistent profits, better peace of mind, lower your cortisol levels, and just make you a happier person and enjoying this journey for what it is, right? And I've talked about some of this already in the last slide, but what is required in an efficient trading system? It's a defined method to capital allocation relative to total account value, a predefined risk tolerance, and a defined strategy to trading that works best for you, that you abide by. You want to keep your defined strategy consistent and don't deviate away from the plan. Define which assets you trade and try not to stretch yourself with too many assets. So, what I mean by all of this here, right? We discussed briefly the idea of having a defined strategy on how you go about taking on any position, whether it's a buy or sell, right? And then you also want to have a predefined risk tolerance, how much capital of your business you're willing to risk per position, right? So you always want to have that predefined so that you know what you're willing to lose each time, instead of just going in and expecting the best, right? Because it doesn't always work like that. It never does, right? It's part of life. And as the Stoics said, we only have control over a few things. We don't have control over the external world. We only have control over really our impulses, our judgments, and our desires, okay? And just making sure that you abide by it, really. So that's what will keep the emotions off, is if you just stick with it. And again, just define also too which assets that you trade, and try not to stretch yourself too thin with too many assets. So if you find yourself being very profitable in, let's say, a particular market, then stick with it, and then stick with those with a certain amount of assets, right? Without stretching yourself with, let's say, 300 of them. Because at that point, you run the risk of missing out on most of them because you're stretching yourself out too thin, monitoring, let's say, hundreds of different things, when you could have just been honing in on mastering, a few charts that you can trade regularly. So at least have that defined too in your business model. Which assets do you normally trade? Which sectors do you normally trade? Let's say it's Forex. Which Forex pairs do you typically trade? So on and so forth. You want to have that set up too, okay? And it doesn't mean that you can only trade these certain amounts, but on a regular basis, you want to have them mapped out. And it's going to make your life easier too, because if you're trading the same assets, essentially, you already know going in, based on your business model, how to approach each of them. And it's just going to get easier and easier and easier. And it'll become closer to second nature the more that you are doing well with them, okay? And I'm not saying that it'll just turn into a pure 100% win rate because you're honing in on those few assets, but it's going to make your life a lot easier, okay? And there'll be way less emotions to deal with overall. And then, as Sun Tzu said, strategy without tactics is the slowest route to victory. Tactics without strategy is the noise before defeat. So just going in like guns blazing with all the capital in your account is only going to lead you to it, you losing it all. That's really it. So you need to have a plan. It's just like anything else, business, war, etc. You have to go in premeditated. And also, the most important takeaway when making a mechanical trading system is also to keep it simple too. If you know what works for you, if let's say you use a certain trading style, certain chart patterns that you see work best with you, then just stick with them and don't deviate away from it. Just keep it simple. If you keep it simple, you're basically preventing certain emotions from coming in to begin with. You're preventing emotions from coming in, which is really nice. And then we're going to discuss meditation. And I have here a quote from Kobe Bryant. And this quote is actually also from a video that I'm going to put in the description of this video that I highly recommend watching, because he elaborates in further detail the importance of meditation, really how much meditation made an impact on his life and his career. So as he said here, I meditate every day. I do it in the mornings. I do it for 10 to 15 minutes. I think it's important because it sets me up for the rest of the day. It's like an anchor. If I don't, I feel like I'm chasing the day as opposed to control and dictate the day. Not that you're calling the shots, what comes forward, but I'm set for what may come my way, which is 100% applicable to trading, right? So we're not supposed to chase the market moving. We're supposed to see what opportunity is being presented to us. And it's really that simple, honestly. And then here, if we go over to Ray Dalio, who's actually the owner of the largest hedge fund in the world, even he's a big person when it comes to meditation. He said here, and I quote, "There are two parts of each person's brain, the upper level part and the lower level emotional part. I call these the two you. They fight for control of each person. How that conflict is managed is the most important driver of our behaviors." And what he is saying essentially is whether or not you're going to allow your emotions dictate your intellectual processing and make the decisions for you, as opposed to you making sound decisions based on the information that's actually presented. Okay? And Ray Dalio has been practicing meditation for over 42 years. He actually accredits it to be the biggest reason of his success is actually from meditation. And I'm actually here, we can see some of the benefits of meditation, and he's mentioned them too as well. Lowering stress levels and process emotions properly. It can decrease anxiety levels. You gain self-awareness. It allows the opportunity to gain new perspectives, and you can raise your pain tolerance as well, right? So by practicing meditation in the morning, right before your trading day, it can really allow you to make much better sound decisions as opposed to just going in and allowing yourself to be susceptible to the market dictating your emotions. And as Kobe said, you would end up chasing the day as opposed to allowing the opportunities just come to you, right? And there's I just want to say right now too, is that there is no one form of meditation that works for, everybody. Each his own. So what Ray Dalio does or what Kobe Bryant practiced himself may not work for you. So definitely take some time to look into different forms of meditation that, you may benefit from, or you can actually get yourself to, be more patient and actually sit down and do so. Because again, I actually know very well that meditation is not that easy to get into. It does take a little bit of time. So ease into it to start off with maybe 30 seconds a day, bump it up to a minute later on, and then slowly increase it as needed, right? To where you find yourself being the best version of you and having that awareness to acknowledge when your emotions are starting to get the best of you and how to take proper action, right? And just some additional practices to incorporate I wanted to put into this video. Here, just post-it notes. You can place them visible in places to act as a reminder, and have a trade journal too. This doesn't need to be solely a record of trades. This can be anything. It can actually even simply be the emotions that you were feeling throughout the day, what triggered those emotions, and how those emotions led you to make the decisions that you made, right? That's why I'm discussing a trade journal quickly here too, because again, it doesn't need to be just a record of what the trades were that you took that day. It could be anything. It could be what caused the emotions that affected you to make a bad decision, right? Or what happened that went right. Okay, so it could be anything. It really just comes down to you. It's your trading journal, and however you want to make notes of it. I've heard plenty of stories of different types of journaling that other traders have done. For myself, I like to journal the emotions that, I had, let's say, that were around me throughout the day. Let's say certain news or certain things that could have impacted, let's say, my emotions and then decision making. That's really what I focus on in mine. So that's just a couple of things. And also here too, as you can see, initially, it's been said that it takes 21 days to form a habit and 90 days to turn into a lifestyle change. Because of it, it does take some time to develop new trading habits. It shouldn't be expected that you can make a drastic change in a short period of time, but it will come. Just if you put enough time into it, you will see the results, and I'm so sure of it too. Okay? And in the next video, we talked about just a couple of quick tips here with the Post-its and then the journal and how, those can be incorporated into what we just discussed in this video. But in the following one, I'm going to elaborate in further detail a whole bunch of different trading tips that could be added as well, to your trading regimen that will improve your performance over time. So I really hope you enjoyed this video. If you have any questions, you can leave a comment below and I will get back to you as soon as possible. Otherwise, I look forward to speaking to you in the next video, and I hope you guys enjoyed this and found value in it. All right, so take care and bye-bye.